What is going on, guys? My name is Mr. Banks, and today we're going to go over how to find levels, how to find intraday levels, pre-market, so you guys can take trades during the day. It's actually a lot easier, especially if you're coming from FinTwit. I know I'm on Instagram Live right now too, so if you're coming from FinTwit, guys, it's pretty simple. People like to overcomplicate it, and they're like, oh, well, this hit my level. Yeah, no shit, it's easy to find. So hopefully I'll make it easy for you guys today. The first one we're going to start off with is Apple. So take a look. Today we smashed Apple, break and hold 158. So how did I find this level? So we had 158 on the level. So what I do before market every day is I go to the 1 hour. I'm always on the 1 hour. That is where I start finding my levels. So when we were at the 1 hour, this was today, what am I looking at when it comes to levels? Well, I'm always looking at the previous day. I'm always looking at the previous day. So the previous day high is something that I'm always going to mark. So it's already marked. Let me do this real quick. So the previous day high is something that I'm always going to mark, starting off on the 1 hour. So let's go ahead and mark that. And that was right about 158. And another thing I want to mark is the pre-market high. So a couple of things that you want to mark when we're finding these levels is the previous day high as well as the pre-market high. These are two of some of the most important levels to mark. So write that down in your notes. So I'll go ahead and mark this pre-market high. So we're going on Apple right now. We had on the watch, break and hold 158, showing you guys exactly how I found this level. Well, exactly how I found this level today was pre-market high, right? So looking at the 1 hour, we can see that 158 is a major level. We rejected off of it in the pre-market. This is showing that if we do break above 158, we are definitely going to see some action up, right? Now, one thing I'm also looking at is, let's go to the daily. This is a major resistance level that Apple has been holding, right? So if we go take a look back here, we can see that we rejected off of this 158 level once, twice, 3 times, and then we're coming up to this level again on the 4th time. Now, something you guys need to understand is when we come up to these major supply levels, the more times it gets touched, right? The more time we come up to these certain levels, the more time the supply gets weaker, right? There's going to be less orders up here to be filled, and the supply should turn into demand once we keep retesting these levels. That makes sense, right? So we're up here on these levels. This was a major resistance level. I mean, 1, 2, 3, 4, 5 times, right? Guys, once we start to hit these major supply levels multiple times like this also goes for demand as well. It is going to, so you're going to see a flip in it, right? So you're going to see a flip in these levels. Why? Because there's going to be less orders of supply up here, right? Every time this level comes up and it gets touched, those orders that are left up here in the supply are going to be less. So once there's less orders, it's more than likely going to turn to demand. Buyers are going to take control, as we can see here. So 158 was that major level that we were watching on Apple. I mean, you could see it on the daily, how big it was. And then going back to the 1 hour, we are looking at a break and hold of that 158, and then a pre-market that 158 around 40 levels. So I knew if we were going to break and hold 158 today, which was above yesterday's high, we have a high probability chance that we're going to head higher. So this is something they need to understand. If something is breaking the previous day's high, then that's showing that there's heavy demand in that area. It's showing that there's buyers up at that level, right? We're not getting weak at that previous day high. It's showing that there's demand, there's buyers there, we're breaking above and we're holding, so we're going to head higher, right? Demand equals buyers. So this is pretty much how I found the Apple level today. Another thing to do is also, we can go down to the 15-minute time frame once we are out of the 1 hour. And we can easily find these levels again, right? So 15-minute, where are we at? About 157.80. I'll let some people in. And the pre-market right here was about 158.40. So guys, I knew if we broke and held this previous day's high that we were going to eventually head higher. And I mean, you can even see it intraday. What happened once we broke and held the previous day's high? We found it as support, and then we headed higher. So this is a pretty big example and a good example of a lot of people talk about, well, how do I find a break and hold? What does break and hold mean? Well, this is a perfect example of a break and hold scenario, right? We broke above the previous day high, and then we held it as support. So it's pretty simple concept. I know it kind of gets a little confusing at first, especially if you're a newer trader. You know, what is a break and hold? How can we tell? You know, how many candles do we need to look at? Really, the ideal is just looking at, are we holding this previous level as support? If so, yes, I'm mostly looking at the 15-minute on a break and hold, as well as we can even use the 10-minute. I mean, the 10-minute was even cleaner on this break and hold. You guys can see it's not dependent on how many candles after that break and hold. It's really dependent, are we getting some momentum after we break a certain level, right? We broke that certain level that we were watching, and are we holding it? And is there now momentum driving up? If we're not selling off and holding this level as support, that risk to reward is now great. There is a high probability chance that we are going to now head higher. And we saw this on Apple today. It was a picture perfect break and hold. Now let's go to a couple of some other watches to find these other levels, right? Meta, break and hold 205 or bounce 197, 199. Now let's go and see how I found these meta levels. So let's go to Meta. Again, I'm always starting at my 1 hour. The 1 hour will show you some major support and resistance levels. Please always start on the 1 hour time frame when you're looking to find these major levels. It will show you, it's easier to look back, right? Because what do we want to do? We want to zoom out and look left when we're finding these levels. That's how you're going to find these major support and resistance levels when it comes to trading, is zoom the fuck out and look left, right? Get off of the 1 minute, get off of the 2 minute. When you're trying to find these levels, start at the 1 hour, because it's very easy to look left and see, okay, this is a major level. Just like on Meta, we're on the 1 hour, 205, major level. We came up, rejected it, came up and rejected it. So what is that telling us? It's showing us that this 205 level is a very major level. Now, if we were to break this 205 level and hold it, then it shows us we're definitely going to see some momentum up. Or if we reject this level again, we're probably going to see some momentum down. And as you guys could see today on this Meta, we rejected this level. We put in a lower high and rejected it and could not get above this 205 level. And you see this nice rejection filling this gap fill here. So this comes up to my next point in finding a bounce level. I said 197 to 199 for calls, right? So let me remove this real quick. How did I find this bounce level? I said if we rejected here to take puts, if we could not get above 205, or 197 to 199. Well, Meta was pretty easy today on this because this level to bounce was starting at this gap fill, right? We started at this gap around 200. And I'm looking left, right? I'm looking left again. Well, what is happening around 199? Well, we had a major rejection around 199. And if we take a look left from this 199 level, we can see that it is also was a major demand level, a major support level here. So let me go ahead and draw that line here. Boom. So you guys see that, right? Support will turn into resistance, resistance will turn into support, right? So 199 was my starting level. It wasn't at this 200, it was 199. Why? Because I saw that this was a major rejection resistance, but was a previous major support, right? We could see that the bodies closed above this 199 level, and that's when we moved back to 205. And then once we broke below this 199 level, we could see it as a major resistance and saw that support and resistance flip. So 199 was the beginning of that, down to 197, which again, we could see when we broke 197, we held this as support over here. Again, zooming out, looking left, held this as support, and we came up and touched that 205. So two things, 199 was showing me it was a major support that ran us to this major resistance at 205. But 197, right, was also a major support that ran us to 205. So again, looking on the 1 hour, zoom out, looking left, I'm seeing these two major supports. So I know that once we broke above, again, we held this 197 over here, which led us to this gap up, right? So we saw it as support, and then we saw it as support, we saw it as a resistance here, and then once we found it as support, we gapped up. So you guys understanding how to find these major support and resistance levels, we have to look left, zoom out, and see, okay, is this an area where we saw heavy demand and saw a big move out of this area? 199 we did. 199 held a support, big move to 205. 197, major support, big move to 205. And again, 197 here, big gap up today. So support and resistance can become easy if you understand this concept. Okay, is this a level where we saw heavy demand and we saw heavy buying and we saw a major move come out of it? If so, then we know that, okay, this is a major support level. And likewise, if we break a major support like 199, what is happening at that level? Well, we saw a major reject at this level. So that is now showing us, okay, this major support is now a major resistance. This 199 is definitely a major level. This 197 is a major level. So this is how we found these bounce areas, right? So it was 197 to 199. We got a nice bounce at 198 on this level right here, which was the previous day's high. So again, as we saw earlier today, as I mentioned earlier, previous day high. You guys can see that right here, the previous day's high at 198 acted as a major support level. So when we're looking at levels, please always mark previous day's high, previous day's low, pre-market high, and pre-market low. These will give you your biggest levels to know. They will react the best for you. Now, moving on, NVIDIA was pretty simple today. How did I find NVIDIA at 264, right? You guys see that, NVIDIA 264. How did I find this level? Again, looking at the 1 hour, pretty simple. Major move up into this level that we majorly rejected, right? This was a major reject from a major level, right? Major support moved to this major rejection, as we could see. So again, looking at the 1 hour, I zoomed out, I looked left, and I said, hey, where is there a major resistance happening? Well, clear as day, 264 was that major resistance right here. So I knew if we broke above 264 and we held, then that was an easy trade to take calls, right? The highest probability is, okay, if we break above this 264 and we hold as demand, we're going to head higher. Or if we reject this 264, as we see is a major level, we came up, double topped, a major rejection that we had today, right? So pretty simple to use the 1 hour to find your levels, previous day high, previous day low. And then also looking at, okay, where are these major rejections happening? Where are these major supports happening? And here's a perfect example of why we mark the previous day high. Just take a look here. Where do we have a major bounce on today? Right, on the video. Where is this major bounce? What do you know? Previous day high, came down, and we had a major support all the way, ran back up to 264. You guys see that? So, I mean, I'm giving you multiple examples of why marking the previous day high is so important. I'm also giving you multiple examples of why using the 1 hour is really what you should be using to find these major support, find these major resistance levels. Guys, this will help you out tremendously. So get your notebooks out. I want you to write this down. 1 hour, look at the 1 hour time frame. Mark where you see major resistances happening, right? So a major resistance is where we're having these major rejections off of, right? Just like this one. So mark on the 1 hour, where are these levels? The next thing I want you to mark is previous day high, previous day low. And the next thing I want you to mark is going to be pre-market high and pre-market low. Now, when it comes to marking the pre-market high or the pre-market low, you can easily do it on the 15-minute. Or if you trade the 5-minute, which I know a lot of people trade, just mark it on the 5-minute, right? You can mark these levels on the 5-minute. Look at the 1 hour for your major support and resistance levels. And then that's when we zoom down to our smaller time frames. And that's when we want to mark these pre-market highs, right? Pre-market lows, and then previous day high, previous day low. So hope that was pretty self-explanatory. Hope that makes a lot of sense. Now let's get into the BBR strategy. I'm going to show you guys an example of how to use the bounce break reject strategy that I use to take my plays. So let's get into the BBR strategy. First thing that I'm looking at in the BBR strategy, I'm going to be using the 200 EMA. I use the 13 EMA. I use the 8 EMA, and I use the 48 EMA. So I'll go ahead and type that out for you guys. But I'm using this on the 2-minute time frame. Computer wants to load. Cool. So let me type this out for you guys so you guys can get a clear thing. What am I using? Indicators for strategy are going to be the 200 EMA. If we're above it, that's going to equal bullish. If we're below the 200 EMA, that's going to equal bearish, right? So just like we use on the daily, right? I know a lot of you guys use the 200 on the daily, right? If we're above it, that's bullish, right? If we're below the 200, that's going to be bearish. Well, I use the same thing with the 200 EMA, but I use it on the 2-minute time frame. And then the next indicators I use is going to be the 13 EMA and the 14 EMA. Sorry, 48 EMA. Wow. So if the 13 crosses up, over the 48, that's going to equal bearish. I mean, that's going to go bullish, sorry. If 13 crosses below 48, that's going to equal bearish. right? And I'll go more in depth. I'm just trying to type this out so you guys can see it on the screen while I talk about it. So I'll just go over it again. If we're above the 200 EMA, that's going to equal bullish. If we are below the 200 EMA, that's going to equal bearish on the day. So I use my 200, which you could see purple trend right here, as my trend indicator, my long-term trend, right? If we're above it, it's going to equal bullish. If we're below it, as you guys can see, on this day, we were below it, right? Bearish. The next one is the 13 EMA and the 48 EMA. Now, if the 13 crosses up over the 48, that's going to equal bullish, right? So we could see here on this green, this green line is the 13, this 48 is going to be the red, right? We crossed up. So now we are bullish on the day here. We're bullish on the day. If we were to cross below it, right, we would be bearish on the day. So for example, we could see the day before, I wouldn't really trade this as chop, I'll get into that. But just for the example, the 13 crossed the 48 here, right? And we saw bearish momentum on it. Obviously this was chop, but you could see how there was bearish momentum once the 13 crossed the 48 and we crossed below the 200, right? So we see that that's bearish. So we move these back over. And the last thing I use is going to be the 8 EMA. So the 8 EMA I use as my trend. I know a lot of you guys use the 9 EMA. That's great. I use the 8, right? You can mark the 8 or the 9 on the chart. That's really up to you guys. You can mark both of them. You can have them both up. But I use the 8 personally when I'm following my trend. And I'll get into that once we enter this trade. So going back to the levels, like I talked about earlier, what am I going to do? Well, I'm going to mark my pre-market high. Or my yesterday's high, sorry about that. Boom. Now I'm going to mark yesterday's low. And I use the wicks for this. I don't use the bodies because the true lows and the true highs are going to be on the wicks. And then I'll also mark this pre-market high. I wouldn't have marked on this, but I would have marked a pre-market low here. And when I talk about pre-market, I'm also talking about after hours. So after hours, pre-market is going to be the same for me. I do not break up the pre-market or the after hours. So let's take a look here. One of the things that we're looking at in this trade, so this is coin we're looking at. If we were to take coins today, one of the biggest things is, are we above the 200 EMA? Perfect. We're above the 200 EMA. So now that's bullish, right? So we have one mark. So I'll just type this out. One mark for bullish. Right, we're above the 200 EMA. Do we have the 1348 cross? We do. And where is it crossing? Well, this green line crossed the 48, this red line up. Perfect. Now we have 2 marks bullish, right? So you can use these as confluences, right? If this is confluences on a high probability setup. So now we have 2 marks for a bullish thesis. Great. Now what are we looking at? Well, are we above this pre-market nice high and this pre-market resistance right here? We are, right? We opened up, we're above it. Perfect. So now we have 3 marks, right? So pretty much what we're doing here is seeing all these confluences to give us a high probability setup, right? And we have all of these things working together and showing us that we have a bullish thesis. We're giving ourselves a high probability setup. Now, the thing when it comes to trading is we never know exactly if the trade is going to be a winning trade or if the trade is going to be a losing trade, right? We have to accept that when it comes to trading. We have to accept that risk. We never know if the trade is going to be bullish or bearish. But what we can do is give us a thesis. This is my edge, right? A lot of people talk about my edge. Well, this is my edge, right? This is my strategy. I know that this works more times than it doesn't work. And especially with all these things put together, I know that I have a high probability. I know that my edge is great and I will win more times than I will lose. So let's go ahead and put 3 marks, bullish, right? So we had above the 200 EMA, 13 crossed the 48 up. Perfect, we have 2 marks. And now we're above this major resistance pre-market high right here, right? Perfect. So now we have 3 marks going for us. That is bullish thesis. Now, the thing I would wait for on this trade, especially on coin today, if you traded coin today, was I would have waited for yesterday's high. Now, as we talked about earlier, if we break yesterday's high, the chances that we continue up are very high, right? Because we're above yesterday's high, that's showing that there's heavy demand, right? It's showing us that the bulls are in control. So if we were to reject yesterday's high, what is that showing us? That's showing us that this level right here, right, the bears are in control. But if we break yesterday's high and we break a pre-market, what is that showing us? That the bulls are in control. They're showing up that we have buyers there, right? We're not selling off. We have buyers. So we broke above yesterday's high, and look what happened on this area. Well, we held it as support. So right here is where I would have taken my entry, knowing that the bulls are for sure in control. Because we easily could have sold off here, but we knew that the bulls were in control once we broke above yesterday's high, as you guys can see, right? Yesterday's high. We broke above and we held this as support. So now we have 4 marks going for us, right? We have 4 marks going for us that equals bullish, right? So once we get to 4, we know this, this is going to be a high probability setup, right? And now we're using the 8 as kind of our entry, right? So we see that there's a solid trend on the 8. So the 8 is also going to be a trend indicator. It's going to show us how long we can stay in a trade. So we bounced off of the 8/13 here, and now we're above the 8 and the 13 here when we came above yesterday's high, and we held it as support. So this would have been my entry into coin today, right? We have a lot of things going for us. And now I'm just going to talk about it one more time so I can drill it into your guys' head. What are we looking at? We are looking at, we're above this 200 EMA, the long-term trend, right? If we are above it, over here real quick. If we are above this 200, that's bullish, right? That's bullish. So that gave us that 1 mark. Perfect. 1348. Well, how do we use this? Well, we use it for bullish or bearish trends. If the 13 crosses up over the 48, that's bullish. What do we have here? This 13 is going to be this green line. 48 is this red line. The 13 crossed above this 48. Perfect. We now have 2 marks going for us that are bullish. Now, are we above pre-market? Major resistance right here? We are. Perfect. 3 marks. And now what gave us that 4th mark was when we broke yesterday's high. So if you guys have been with me this whole entire time, you saw earlier how important yesterday's highs are, right? You see how important yesterday's high. If we break and hold that, there's going to be movement up. I mean, I'll give you the example on Apple again, right? Let's go to that 1 hour. Right? Let's go to the 5 real quick. I mean, you guys see, breaking yesterday's high on Apple, where could you have taken that trade? Boom, right here. So I'll kind of go into Apple real quick using the BBR strategy, right? From what we just learned. What happened? We're above this 200 EMA. Perfect, right? That's bullish, right, guys? That's bullish. The 13 crossed the 48. So zoom in here so it makes it easier for you guys to see. This 13 crossed this 48. Perfect. We're bullish. Now what happens? Well, we haven't entered into a trade yet until we broke the pre-market high and we break yesterday's high. So this would have been, we did take Apple, and this would have been a great entry here, right? So off of the 8 and off of the 13. So let's talk about the 13 a little bit more, and let's talk about the 48 EMA a little bit more. How do we use these? Well, we use these as kind of like our defense and bounce areas. So we like to use the 13 as our first defense, our first bounce. So if we come up here, we're above the pre-market high, we're above yesterday's high, right? We flagged out right into this 13, which guess what? Was that yesterday's high. So we are now taking this trade off of this 13 in confluence with above the 200, above 1348 crossed up, and now we're finding support on yesterday's high bouncing out to 13. So this would have been my first entry. Now our second line of defense is going to be this 48. So let's just say we bounced off of this 13, we came up here and then we broke back down, right? This 48 would now act as my second line of defense. So if we broke back down and we came to this 48 here on yesterday's high, so this is what this red line is, yesterday's high, we could have now taken another entry here because I would have known that the 13 still crossed the 48, we're still above the 200, and we're still above pre-market high and yesterday's high. So even if we took this entry here, and let's just say, for example, Apple broke down at this level and broke through the 8 and the 13 and came back down to yesterday's high, I would have taken an entry here because this 48 is showing me that there's still strong support. It's acting as my second line of defense, right? So the 13 is what we really want to take a trade off of if it lines up. If we break that, the 48 is going to be our second line of defense. Now, if we break through this 48 EMA, we head all the way down to this 200. I'm not taking a trade off the 200. Why? Because we have broken this 13 and the 48. I will take a trade once we would have broken back above and held this 48 as support and held 13 as support, right? The 200 is just my trend, is my long-term trend. I'm not using it as a bounce level. I'm just using it as my trend. I really want to take trades either off of the 13 or off of the 48, right? These are my two levels I want to take in confluence though, not just taking it just when they bounce off the 13, in confluence with other things like pre-market high and yesterday's high, right? Which we got right here. This was an A plus setup right here, right? Above the 200, 13 crossed the 48, yesterday's high, bouncing off of the 48, holding in support. This was my A plus setup on Apple, and we took Apple today, right? So now let's get into, once we are in a trade, how long can I stay in a trade for? Well, let's just say we took a trade here. I'm now going to use the 8 EMA as my trend is my friend until it bends. And what I like to do really is use the 15 minutes, because the 15 minute is going to keep you in a trade for a lot longer versus the 5 or the 10, right? So this is about where we took the trade right here. Now we can literally hold into this trade all the way up, right? Literally until the end of the day, we can hold until this trade because nothing broke below this 8 EMA. So now we can hold runners once we made our entry here. And now this 8 EMA is our friend, right? The trend is your friend until it bends. Now we can hold this 8 EMA and hold runners literally all day until we break this 8 EMA. So I know a lot of people like to use the 9. You can use the 9 as well. But the 15 minute is going to be my major level to use, right? That's going to be something that I really like to use versus the 5. Versus the 10 minute once we're in the trade, because the 15 minute is really going to keep you in runners for a lot longer. Now, that doesn't mean to not look at the 10, to not look at the 5, right? Right? Doesn't mean to not look at the 5 or the 10. But as you guys can see, right, we kind of had a break and hold below right here. Whereas on the 15 minute, we didn't, right? We were in the trade for the entire time up until close. So 8 EMA, trend is your friend. Use it as a trend once you enter into a position, and use that EMA until it breaks, right? Until we get a break and hold below the 8 EMA. Now we want to see a candle actually close below the 8 EMA. It's not just a wick below, right? So don't panic sell. We want to see an actual close below that 8 EMA in order for us to trigger our sell on our runners. Or one thing you can do is hold your runners, right? At least one runner until break even. Because this came down and say we entered in here, right? We're still in the trade. So we can hold this because we are still above our break-even level that we entered into. So hope this made a lot of sense. Again, 1 hour. Please use the 1 hour to find your major support and resistance levels, like we saw on Apple, like we saw in the video, and like we saw on Meta, right? Using the 1 hour and zooming out is going to show you your major support, your major resistance levels, right? From there, we can now go into the 15-minute, the 5, or I like to use the 2 as well, right? Because 2 is my entry, not 1. And we can draw next previous days highs, previous days lows, and then pre-market high and pre-market low. So we're finding our levels on the 1 hour, our major support and resistance levels. So our big support resistance levels. We're then zooming down to either the 5-minute, you could use the 15 if you like, but most of you trade on the 5, right? I trade on the 2-minute, so I would use the 2, and I'd mark my pre-market high, I'd mark my pre-market low, I'd mark previous day's low, and the previous day's high as my levels. So I'll say that one more time. Use the 1 hour to find your big support and resistance levels. Zoom all the way down. I know most of you use the 5-minute. Really zoom down to the time frame that you use to trade on. Some people trade on the 15-minute. That's perfect. Use the 15-minute to find your levels. A lot of you use the 5-minute, right? So once after we got our major support and resistance levels on the 1 hour, we'll go down to the time frame that you trade on, right? Because you want the levels marked. And now we will mark pre-market high, we will mark pre-market low, we will mark previous day's high, and we will mark previous day's low. And that is how you find your levels each and every day to trade on. And now I gave you guys a couple of examples of the actual strategy I use throughout the intraday to take my trades, how we take them, what to look for. If you want more of a breakdown on the BBR strategy, I'll put a YouTube link out, find the YouTube link. I have tons of videos on the BBR strategy. I also have tons of threads that fully break down on my Twitter as well. So please go use the free tools that I give you guys for these strategies. I hope this was a really big lesson for you guys. I hope you learned a lot, how to find levels, how I find my levels, and how you can find your levels every single day. That's all I got. I really appreciate you guys coming out, and I will see you guys next time.